Hey everyone, John Henry here from School of Trade, and today we're going to be looking at a range fake out breakout here on crude oil. Beautiful looking setup here. Let me get my orders in place. 52.14 will be the sell stop. We'll take 2 off there. Looking to take 1 contract off back to the range highs, 52.65, and then looking for an extension move up to 52. We'll go to 52.92 to be safe there. So basically what we're looking at here, long 2 contracts, 52.38. The first target coming off at 27, second target coming off a bit higher here, 92. That'll give us 54 ticks on that one. And really the idea behind this is you can see this consolidation forming inside here. Very, very blatant consolidation. And what happened is we broke down through the bottom side, which is counter trend. The trend this morning is to the upside. So you've got to be really careful with those breakouts against the trend. Let me draw that up there so you can. I accidentally deleted that line. That way it looks a little bit more obvious, and it almost looks as though there's kind of like a little bit of a midline in the consolidation there too. You can kind of see that, but overall the consolidation broke out down against the overall upward trend, and it just looks like a deeper pullback. It looked like the buyers want to get a cheaper price to bring this right back up, and we formed this beautiful bullish candle on that fake out breakout to the downside. So it looks really, really good to the upside. I'm only in 2 contracts just simply because the stop is relatively large at 24 ticks, so we can afford to go in about 2. Don't want to go much more than that, otherwise you start kind of dealing with the risk parameters. But overall, we're in a great place. Just looking for that first target, and you can see the immediate reaction as soon as those sellers they're all just getting stopped out. That's all that's happening right now. A lot of the stops are going to be above this 52.63 and then as well above 52.68. So we'll be looking for a little bit of kind of fireworks, if you will, above those levels. So we've got our first target taken out. Let's get our stop to break even. And we're just looking to ride this thing up to the next level at 52.92. Now, we are back at consolidation highs, and I did like to take profit here. The reason behind that is consolidation highs. We've seen resistance come in here already before, and actually a couple other times you may even be able to drag it down a little bit. You can see that level is definitely holding. So I'm not going to try to trade through it. I want to see prices obviously make it through, but I don't want to hope for that trade to work out. So I'm going to take a little bit of profit there. We've got 27 ticks locked in, and then we're just looking for the 54 final target up to that extension, 52.92. You may be able to go a little bit higher, back up to these highs somewhere through here. That wouldn't look bad as well. I'm going to be a little more conservative on that target and just take it at 92 and call it good there. So far, so good. 27 ticks. If we get that other 54, we'll be looking at 81 ticks on only 2 contracts. Not bad. So that's going to be the trade. We're just kind of waiting for it to fire off for a final move up. See if we can break through this consolidation high. And if we can, there may even be an opportunity to break through, kind of break out, pull back to that area, and then bounce again. For some of you more aggressive traders, you could hop in on a move like that and just ride that back to the highs in case you didn't want to take this fake breakdown here. So plenty of options here, at least potentially, just waiting for a little bit of a break higher. So we'll be back in a little bit and see if we can get that rise. All right, coming back, just a quick little update here. I'm locking my stop into 52.60, and the primary reason behind it is we did kind of what we were looking for. We broke out to the upside, we pulled back. You can see that level at 65 holding, and now we're triggering another long trade. So some of the more aggressive traders who are waiting for that breakout sort of pullback area to buy, they're in now at 66. So their stops most likely going to be below that little red candle low, 62. So I'm going to go drop my stop at 60. If they get stopped out, I'm going to take my profit. It'll be a nice profitable position, but I don't want this to come all the way back down in the range and end up being a fake break high, just like we saw down here. So locking the stop into 60. Still looking for 92, and again, all the folks that were waiting for that breakout and then a buy back down at 66, they got filled, and they got filled in a really nice move. They barely took any heat, and now they're rising back up again. So with this rise higher, just kind of looking for not necessarily even just our buying orders down here, but more buying orders coming in to flood this market from 66 and up. All the folks chasing this move as well, who potentially missed that buy down here at 66, they may even enter all the way up at 87, above that green candle's high. And if that's the case, then we should see an easy fill for us at 92. They may even try to expand it a little bit higher than that. But again, just kind of forecasting what may happen, but we need to see our secondary target get filled first before we start looking for more. So you can see that big kind of pop that happened right there as soon as we broke above that green candle's high. So there are definite buying interest coming in here. And because of that, we could probably even lock our stop in a little bit tighter, go underneath this green candle. Most buyers, if they're buying way up here, they're not going to want to see this green candle's low broken. And if that does break, we're probably going to see a decent amount of selling pressure coming in. So we don't want to ride that out either. Again, conservatively, your stop would just be, down here closer to break even. But with the way that this is setting up, I'm not going to risk it. I know there are buyers entering here, so there's no reason to not be a little more aggressive with the stop. So we're just looking for a little bit more continuation to fill that 92, and that will lock in our target. So again, if we get that 27 and 54, we're looking at 81 ticks on the trade. Potentially beautiful profitability on this move. Just need to see it rise a little bit higher here with this buying interest that we're seeing. So hopefully we won't have to pause it. Maybe we will, but we'll be back in a little bit and see if we can tag that 92. All right, and no sooner do you hit the pause button than it shoots right up to the upside. So got that target filled up there, 81 ticks on the trade. Let me cancel my stop. Beautiful move to the upside. Even the folks who are looking for a more aggressive target at 95, they're getting filled as well. Now, again, this fake break was a big heads up, especially when it's going against the trend like that. So it's a beautiful entry to the upside. Now, we got in quite, I would say almost aggressively down here at the lows, even though it looked beautiful. But right here, at 38, and rode that all the way up, back up to these highs again. Now, those aggressive traders, like we were talking about, they're going to be buying long down here, above here, above here. So they're still looking for some bigger targets to the upside. So this may actually cause, something like a little bit of a wider channel, something like that, where they're looking to target those channel highs. So keep an eye on those. But outside of that, we're done with the trade. We're out 2 contracts, 81 ticks on the trade. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.